Beneath Florida's glittering sun and swaying palms, a silent, unseen disaster is brewing. The paradise that once promised endless ocean views and suburban serenity is now teetering on the edge of a full-blown housing collapse. As 2025 relentlessly unfolds, thousands of brand-new homes, once gleaming symbols of prosperity, now sit eerily vacant. Home values are plummeting by tens of thousands of dollars, with some cities seeing drops exceeding 15%. This is a brutal one-two punch of relentlessly rising mortgage rates and skyrocketing insurance costs that is utterly hammering affordability for countless families. Builders are openly panicking, slashing prices, and offering incentives that were once unthinkable, like $25,000 off just to move inventory. But it's not working. Incomes simply can't keep up with the crushing weight of $3,200 mortgage payments and $6,000 insurance premiums. The Florida dream is fracturing. Welcome to the Sunshine State's darkest secret. These aren't just any cities. These are the 10 fastest collapsing housing markets in Florida, where the dream of paradise is slipping away faster than ever before.
Number 10. Homestead. Situated in the southmost reaches of Miami-Dade County, Homestead rapidly grew as a perceived affordable entry point to the sprawling South Florida market, attracting families and service members. Its housing market soared, reflecting immense desirability for those priced out of Miami's core. But in 2025, Homestead's expanded housing market is flashing critical warning signs. And if economic conditions worsen, it could face a severe 2008-style collapse, with home values potentially dropping by 15 to 20%. Homestead's explosive growth was overwhelmingly driven by its relative affordability, its military presence, Homestead Air Reserve Base, and agricultural industries. This led to substantial price appreciation, with median home prices peaking around $420,000 in 2022. However, this growth has now collided with a brutal reality. A significant economic downturn would impact its service and agricultural sectors. More critically, Florida's escalating and crippling property insurance crisis has hit Homestead particularly hard. Annual insurance premiums for homeowners here can easily soar into the $7,000 to $10,000 plus range, even for modest homes, turning what was once affordable into an unbearable burden. With current 7% mortgage rates, a $350,000 home now costs over $2,300 per month in principal and interest alone. Inventory has already surged, up 30% year over year, and homes are sitting longer, averaging 80 days. In a true meltdown scenario, this surplus, combined with the crushing insurance burden, would overwhelm reduced demand, leading to widespread price reductions and a painful erosion of equity reminiscent of the widespread financial devastation seen in 2008.
Number 9. Jacksonville. The largest city by land area in the continental U.S., it saw massive housing gains between 2020 and 2022. But in 2025, the story has dramatically shifted from relentless boom to a chilling, undeniable slowdown. The median home price in Jacksonville has dropped from its mid-2022 high of $410,000 to around $357,000, representing a brutal fall of $53,000 or nearly 13%. What's relentlessly causing this sharp downturn? It's a devastating mix of higher borrowing costs, pervasive overbuilding, and a dramatic, unprecedented rise in housing inventory. In 2021, Jacksonville had fewer than 4,500 active listings. Today, that number has horrifyingly approached 9,000, representing an increase of over 100%. Homes that used to vanish within 10 days now painfully linger for 40 to 60 days, and many desperate sellers are cutting prices or offering significant cash toward closing just to attract any buyers. The overwhelming oversupply, particularly in fast-growing suburbs like Middleburg and Oakleaf, is mercilessly putting downward pressure on prices across the entire metro area. Insurance premiums have surged here as well, adding immense financial pain, particularly in flood-prone zones near the St. Johns River. Homeowners now pay an average of $4,200 annually for coverage, a brutal leap from just $2,100 in 2021. Property taxes have also climbed relentlessly as assessments catch up with the pandemic-era price hikes, pushing average tax bills to around $3,800. That's a monumental leap for a city where the median household income sits around $63,000. Renters aren't immune either. Rising inventory, crushing affordability pressures, and relentlessly costly overhead are reshaping what was once a pandemic-era housing winter into a cautionary tale.
Number 8. Port St. Lucie. This city has long been celebrated as one of Florida's most appealing family-friendly destinations. Safe, clean, and growing at an incredible pace. So fast, in fact, that home prices exploded to $405,100 in 2022. But now, in 2025, we're seeing those prices slide back down to $375,513, a $29,497 drop, or just over 7%. On the surface, this might not seem catastrophic, but dig a little deeper and the cracks are showing fast. The first major issue is collapsing buyer demand. Interest from out-of-state buyers, which significantly fueled much of Port St. Lucie's pandemic-era boom, has all but dried up. With higher mortgage rates and fewer people relocating, the once red-hot bidding wars are a distant memory. Now, sellers are forced to offer concessions, rate buy-downs, and aggressive price cuts just to get a showing. There's also a pervasive pending sales collapse. Last year, nearly 1 in 3 pending sales in the city fell through, whether due to financing problems, low appraisals, or simply cold feet from buyers. Then there's the surging HOA fees. Many neighborhoods here, particularly newer developments, saw their HOA costs rise dramatically to cover soaring insurance, maintenance, and storm-related upgrades. In some communities, fees jumped from $80 to $200+ a month, and residents are feeling a severe pinch. While homes are still selling, they're taking significantly longer. Days on market has increased from about 24 days in 2022 to over 65 days in 2025. That might not sound like much, but in real estate, that's a blinking warning light. Port St. Lucie isn't in freefall, but it's slowing fast. The demand engine that once drove growth here is stalling, and unless interest rates fall or local job growth spikes, this could be the start of a much steeper slide.
Number 7. Tampa. This city was once the rock star of Florida's real estate scene, fast-growing, full of jobs, and absolutely booming in the early 2020s. Its rapid ascent, fueled by an intoxicating mix of genuine growth and heavy investment, marked it as a significant early flashpoint where a dangerous housing bubble began to dangerously inflate. Between 2021 and 2022, this Gulf Coast hotspot became a magnet for remote workers, retirees, and crucially, Wall Street-backed investors chasing sunshine and profits. This insatiable demand pushed average home prices to $383,410 in 2022, creating unsustainable price appreciation that far outpaced local wage growth. The frenzied bidding wars were a clear symptom of the bubble's formation. But in 2025, that glow has faded fast. Prices have dipped to $360,130. The red flag waving hardest is exploding housing inventory, up more than 55% since last year. Homes that once sold in under 2 weeks are now sitting for 75 to 90 days. The short-term rental market is crushed, with thousands of Airbnb landlords flooding the resale market. And then there's the critical issue of buyer financing, with mortgage rates hovering around 7.5%, pricing out buyers. Tampa's aggressive growth, once its strength, has left it with overvaluation and oversupply, the very hallmarks of a bubble now beginning to burst. If current trends persist, a significant correction is absolutely on the table, threatening widespread financial devastation.
Number 6. Sarasota. Known for its white sand beaches, vibrant art scene, and a sophisticated retiree population, Sarasota became a prime magnet for high-end investment and second home purchases. Its rapid price appreciation and overvaluation, fueled by affluent buyers, marked it as a key flashpoint where Florida's housing bubble truly began to inflate in the luxury segment. Sarasota's market overheated rapidly, driven by out-of-state wealth seeking paradise and speculative gains. It was labeled one of the most overvalued metros in Florida, peaking at 38% over fair market value in 2022. This aggressive upward trajectory, detached from local economic fundamentals, was a clear symptom of the bubble's formation. Now, the balloon has popped. Inventory has soared to levels not seen since 2015, with over 3,700 homes listed for sale, putting serious pressure on prices. Homes that were once fetching $1.2 million are now struggling to move at $975,000, representing a colossal 18.75% drop and signaling widespread financial distress. If you're finding this crucial analysis of America's collapsing markets indispensable for your future, please gently hit that subscribe button to discover the nation. Your support powers our vital investigations. Buyers are tightening wallets, and mortgage rates topping 6.75% mean the luxury home crowd is getting pickier or disappearing. Add in crippling insurance premiums, $8,000 to $10,000 plus annually for waterfront homes, and the true cost of ownership is unbearable. Sarasota's market, once riding high on speculative luxury, is now in painful correction. Its overvaluation, a stark reminder of where the bubble truly took hold.
Number 5. Fort Lauderdale. This city, celebrated as the Venice of America, with its stunning beaches, intricate canals, and world-class yachting industry, grew at an incredible pace, epitomizing the luxury coastal boom that significantly contributed to Florida's broader housing bubble. Its rapid price explosion, fueled by high-net-worth migration and investment, was an early warning sign of truly unsustainable growth. Fort Lauderdale's boom was overwhelmingly driven by wealthy out-of-state buyers, foreign investors, and remote workers chasing an aspirational lifestyle and perceived exclusive value. Home prices exploded to a median of $680,000 in 2022, utterly detaching from local incomes and fundamental value. This created a strong pull for developers to rapidly expand, pushing ever higher with luxury condos and beachfront properties. Now, the engine is stalling. Buyer demand from even affluent, out-of-state, and international sources has significantly cooled. Inventory, particularly in the luxury condo and waterfront segments, is spiking. Prices are sliding back down to an estimated $555,000, a $125,000 drop, or nearly 18.4% from its peak. This coastal paradise was simply never meant to sustain such inflated valuations, and the financial foundation is cracking, a direct result of the bubble's expansion. The skyrocketing coastal insurance costs, driven by increasing hurricane risks, now often top $10,000 to $15,000 annually, adding immense pain for homeowners. Fort Lauderdale's rapid, speculation-driven growth was a clear symptom of the bubble's beginning, and it's now experiencing a hard reset that's hitting hard at the high end, making it a critical market to watch for further declines.
Number 4. Palm Bay. Palm Bay isn't flashy like Miami or Tampa. It's a quiet city on Florida's East Coast, best known for being affordable, until it tragically wasn't. Between 2020 and 2022, Palm Bay's median home price jumped from $190,000 to $370,000, a shocking 95% increase. That explosive boom was recklessly fueled by pandemic migration, transient remote workers, and aggressive flippers desperate to make a quick buck in a once sleepy market. But in 2025, Palm Bay's inevitable crash is quietly becoming one of Florida's worst, threatening to hollow out entire communities. Inventory has exploded, and vicious price cuts have become the chilling standard. Homes listed at $400,000 last year are now being savagely slashed to $300,000 or less, and still sitting conspicuously empty. Builders continue flooding the market with new homes, offering desperate incentives like $20,000 discounts and interest rate buydowns, further dragging resale values into the abyss. Palm Bay's biggest vulnerability is its dependence on fleeting speculative demand. With interest rates stubbornly stuck above 7%, the average monthly payment on a median-priced home exceeds $2,800, a sum far above what the majority of local families can manage. Should current grim conditions worsen, Palm Bay could witness a brutal 60 to 65% price collapse, ruthlessly returning median prices to $150,000 territory, where they existed before the boom. It may not grab national headlines, but Palm Bay is quietly sinking into the financial quicksand of Florida's housing bust, one painful price cut at a time, leaving behind a stark landscape of regret.
Number 3. Winter Haven. What was once praised as the perfect middle ground between Tampa and Orlando is now ground zero for Florida's most dramatic market correction. Prices have dropped more than 20%, inventory has nearly doubled, and investors, they're fleeing fast. Winter Haven was a prime target during the pandemic surge. Flippers, remote workers, and out-of-state landlords rushed in, snatching up properties at record speed. But they pushed prices far beyond what local residents could afford. And in 2025, the market is cracking under the pressure. Vacancy rates are climbing, rental profits are drying up, and many homes are now listed below their 2021 prices, with no floor in sight. This isn't a market correction, it's a collapse, driven by overhype, overbuying, and unrealistic expectations. New subdivisions sit half-empty. Renovated flips can't find buyers. And those who bought in late 2022 now face steep losses they never saw coming. With population growth slowing thanks to families being priced out by rising costs, it's getting eerily quiet in some once bustling subdivisions. What was once marketed as a Florida dream now feels like a ticking financial time bomb where paradise isn't just lost, it's being foreclosed on one painful listing at a time. Winter Haven isn't just cooling down, it's unraveling. And in 2025, it has officially become a prime candidate for the state's next big housing bust.
Number 2. Cape Coral. Once marketed as Florida's last affordable waterfront paradise, is now tragically at the very terrifying center of the state's housing nightmare. During the pandemic, prices exploded with unsustainable velocity. The median home price here shot up from around $230,000 in 2020 to over $470,000 in 2022, an astonishing 100% increase in a mere 2 years. But in 2025, Cape Coral's housing market is not just falling apart, it's collapsing with terrifying speed and force. The area endured massive, unprecedented overbuilding. Developers foolishly flooded the region with thousands of new homes, confident that demand would last forever. Now, many of those homes sit conspicuously empty, while builders are offering desperate $60,000 plus discounts, rate buydowns, and even paying insurance premiums to lure hesitant buyers. But nothing's working. Buyers are gone. Cape Coral is also suffering profoundly from skyrocketing homeowners' insurance costs due to increasing flood risk and tighter building codes after Hurricane Ian's devastation. Insurance premiums have more than doubled, with some policies exceeding $9,000 annually, making even modest homes utterly unaffordable for average Floridians. Simultaneously, property taxes are relentlessly rising, HOAs are demanding bigger reserves, and buyers are grimly waking up to the hidden, overwhelming costs of owning here. Inventory is 3 times higher than in 2022, and over 50% of homes on the market have already endured deep price cuts. Days on market have doubled, and many desperate sellers are chasing the market down, hoping to salvage something before even deeper, catastrophic losses hit. What was once marketed as a Florida dream now feels like a ticking financial time bomb where paradise isn't just lost, it's being foreclosed on one painful listing at a time.
Number 1. Miami. Finally, at number 1, we have Miami, Florida. The name alone sells a lifestyle: palm-lined boulevards, ocean views, neon nights, and international allure. But in 2025, behind the glamour lies a market on the brink.
home prices are down 12 to 18% in key neighborhoods, and in some luxury condo towers, values have plummeted by over 25%. The high life? It's now tied to high risk. For years, Miami was a magnet for investors, celebrities, and crypto millionaires, but that investor class has vanished. Foreign buyers are pulling out, remote workers are relocating, and the result? Thousands of high-end units sitting unsold, or worse, underwater. Insurance premiums have exploded, especially in flood-prone areas near the coast. Rising sea levels, worsening storm forecasts, and stricter FEMA maps have made coverage nearly unaffordable. The rental market is oversaturated. What once pulled in premium short-term income now faces vacancy, regulation, and shrinking returns. Locals are priced out. First-time buyers are locked out. And flippers? They're taking losses just to escape the collapse. Miami is still dazzling, still dynamic, but the real estate math no longer adds up. For anyone hoping to buy in 2025, Miami is a city of dreams built on shaky ground. And beneath the skyline, the crash is already happening. If you're finding this crucial information for understanding market vulnerabilities, please gently hit that subscribe button to discover the nation. Your support powers our in-depth investigations.
The message is clear. Florida's real estate landscape is shifting dramatically. Stay informed, stay vigilant. Its beaches still call, its skies are still blue, but beneath the sunshine, the cracks are showing, especially in the housing market. From Lakeland to Cape Coral, from once booming suburbs to fast-growing cities, buyers are waking up to a new reality. The same homes that soared in price just 2 years ago are now sinking. This isn't just a slowdown, it's a reckoning. Overbuilding, inflated pricing, sky-high insurance, and shaky rental returns have left many Floridians and hopeful newcomers holding the bag. And in some cities, that bag is full of falling equity and rising regret. The American dream didn't disappear here, but it did get distorted. So if you're looking to buy in Florida, be cautious, be informed, be strategic. Not every palm tree hides a paradise. Some are planted in markets that won't recover for years. Don't forget to like this video, share it with anyone who needs to see this vital information, and of course, hit that subscribe button for more in-depth analyses from Discover the Nation. We'll see you in the next video, because sometimes knowing where not to buy can be the best investment decision of all.